The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 5th terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to give us a call, 877-927-6648. If you can't dial in, you can always send me an email. Let your fingers do the walking. Just type in steve@tfnn.com, and inside that subject heading, put radio show question. And, of course, inside the Tigers Den, well, just about any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show right now. The Dow trading up 279 points. She's printing 24,543. The S&P up 22 points, trading out at 2667. NASDAQ up 53. That's about 0.8% to the upside. That's a 6613 print. Not all indices to the upside. The semis are off 5 points, about 0.5%. Spot volatility index down 4%. She's trading at 1920, still above the 50-day exponential moving average. It's got to make you say, something to think about. If we go take a look at Goldilocks, she's down $10. She's trading at $13.29. Silver's up 13 cents, $16.39. Amazon, the leader dollar-wise, to the upside, $44, a little over 3%. $14.55 is the print. Booking Holdings up $21, 1%. Tesla up 4%. That's $12. AutoZone up nearly 10, nearly 1.5%, or a little bit over that. Long Financial Corp up 77%. Up 9 buckaroonies out there. To the downside, it's Regeneron Pharmaceuticals. That's $9, a little over 2.5%. Anaptys Bio, ANAB. Let's just go with the ticker symbol. That's down 9%, or $8.50. Loxo Oncology off $8. Biogen is down $7.50. Blueprint Medical up $5.65. So we do have some things to the downside. We've got things to the upside, and we've got some divergence. We have some potential problems in River City. Yep, you heard it here. You may have heard it elsewhere too, but there are some potential problems. So let's deal with those first out here, because if these problems go away, then what we have is the return of the bull. And what I'm referring to out here is I'm really referring to the NASDAQ. Now, let's do it a couple of different ways. If we were to go through a checklist, and you and I, we have a checklist to determine whether the market is bullish or bearish, if it's a unanimous decision, part of that checklist, there's no question about it, would be market breadth. If we take a look at the NASDAQ 100, we try to identify market breadth, we can go take a look at where price is trading in relationship to the top or the bottom of its TAS market profiles. And as we take a look at the daily chart right now, you're going to see that it still remains bearish. Aha! So market breadth is not bullish here by any stretch of the imagination. We have 33 issues. We're not talking about the top 5. We're not talking about the top 10. We're talking about there are 33 issues in the NDX 100 where price is trading below the bottom of its box. The simple, we're going to try to keep things simple, to keep it simple, the KISS theory out here, is that this is a bearish message. Doesn't tell us whether any of those issues found the bottom of a bottoming pattern out here. Just says that, hey, you're trading below the bottom of a box, so not so fast. There are only 9 issues inside of the NASDAQ 100 where price is trading above the top. The rest are trading in between the box. So 8% above, 31% to the bottom, and 61% of these are in neutral territory. So that's number one. Well, if, market breadth can be a lagging indicator, but this stage of the game, based upon the rally over the last 2 days, you would think there wouldn't be a whole lot lagging. Well, let's continue to dive down further. Let's say that stays let's say that stays in a bearish condition for the rest of the day. Is there anything that could change your mind out there? Anything? Probably one thing. The one thing would be, where does price close in relationship to Stevie's red line inside the NQ out here? We go take a look at the NDX 100. That would seem to make sense out here, and I like to make sense, but let's take a look at the equity futures contract, because this is providing us with more data. Now, as we take a look at Stevie's red line, we can see how price has made it to the top. That made it slightly over that red line. That's right now priced at 66.42. This is acting as resistance. This is a potential problem. And the real problem is, if you look at the very bottom panel of my chart out here, you're going to see that the price oscillator is below zero. There's only one way to read this, and that is that we have a falling price oscillator below zero. And typically, and almost all the time, that is a bearish message. That's why it's so important, especially now, for a price to at least close above Stevie's red line to say that, hey, this market is in rally mode. Without that, we have a different message between the NQ and that of the Dow, that of the S&P 500. We'll go take a look at that. Which one is more important? I don't know. Maybe we do know. And the reason why we do know is because if there is a problem in the market, it truly is inside the NASDAQ. And that means we should look at the bigger picture. Always got to look at the bigger picture out here. And if we look at the bigger picture, this is what it looks like as we speak right now. It made one of those significant tops. How do we know that? We know that because how tops are made in markets, whatever time frame it is that you trade. This case here, intermediate term, price was moving higher, doing with less relative energy. That's the black diagonal line. Does just that act alone, is that a problem? No. It's kind of like a weather forecaster saying, you got a 40% chance of rain out here. It becomes a real problem when it confirms. And when it confirms, well, we see some type of bearish reversal signal. You got that on the trading week 3 weeks ago when price gapped to the downside. Gaps are our friends, whether you're a bull or whether you're a bear out there. Well, in this case here, not only did it on a weekly basis gap down, it gapped down and it stayed below Stevie's red line on a weekly time frame out there. Yes, as we speak right now, 1:14 in the afternoon, if this is when the market were to close, you would have a hammer candle for the week. I don't know how it's going to look tomorrow afternoon. What I do know is that price on the NQ on the daily basis needs to close over Stevie's red line to give it a chance to get up to its weekly level. Or in the case of the NDX 100, that'd be about the 68.89 area. That would be a nice bounce, a couple hundred points from where we're at. But right now, there are troubles, and they're all inside the NASDAQ. Steve Rhodes with TFNN. We'll be right back. There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation, as ranked by Timer's Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so our first question came in yesterday. Of course, I was doing yesterday's show at 8 o'clock in the morning, and Eddie, who had sent in the question, wasn't aware of that. And so I told him that I would go ahead and get to that during the early part of the show. So we're going to do that. And what Eddie's question was, maybe your question as well out there. Remember, if you've got a question, the question that you're asking me, probably somebody else is thinking about as well. And yesterday, when Eddie sent me a email, it was with regard to asking a question about volume, specifically inside the QQQ or the NDX 100 out here. And it was something that he was reading in a midday broadcast by the folks over at Investors Business Daily. And Eddie, I did not read what their broadcast was. I don't use their system. I'm not saying there's anything wrong with their system. I don't use their system, their data, the newspaper. I like reading it if I'm flying somewhere. But I can't speak about the way that they do things. Again, not a knock, but what I can do is I can share with you my interpretation of volume, how you can use my interpretation, go back, take a look at it on your charts, so on and so forth. So what we're going to start with, there are a few things that you and I know, and we know this with specificity. How about that? I haven't used that word. That's a big word for Stevie to use. We know this, and that is this, that what the Qs do, for reasons that I don't know, I just know it, is that when they make bottoms, they do it with volume. Now, what I have up on my screen right now is a weekly chart because it's easier to show you on a weekly chart because the volume spikes here are just simply so clear. And when you see that and you see these volumes, it doesn't mean price is going to go down and test even that swing point or the lows. Sometimes it does, sometimes it doesn't. That's not the point. The point with regard to volume is that what the Qs do is they make bottoms. And you were also asking, hey, when you make a bottom and you've got light volume, is that a problem? The answer there is no. When a bottom is made, oftentimes you will see light volume coming out of it. That's where you start to get confused with thinking that maybe this is nothing more than a retracement to form an A to B equals CD to the, in this case, would be to the downside. Not so fast. Now here, if you take a look at some volume spikes on a weekly basis inside the Qs, Eddie, you're going to see, if you go back to the week of August 24, 2015, 449 million shares out there. That was a bottom. That was a significant bottom. That got down 84.74. We haven't seen the test of that. We're not going to see the test of that anytime soon out here. That was a bottom. If you take a look at another bottom that was out here, this is back in October 2014, 424 million shares. You'll see that on the move up, volume from even a weekly basis wasn't really doing much. Yeah, take a look at a bottom that formed out here in April of 2014. Interesting, we're in April of 2018. There was a bottom formed out there, 348,000 shares. Price continued to move higher, oftentimes on light volume. Now, on a daily basis, when I switch over the daily chart, what the Qs also do is they make tops with light volume. Typically, when you see tops that form out there, just because you see a, by the way, just because you see a light volume day inside the Qs doesn't mean that is a top. But they tend to make tops with light volume. Now, if we fast forward on a weekly basis to the week here of February the 9th, right? February 5th, my apologies, began February 5th, you're going to see one of the highest volume trading weeks of the century, not the century, but of almost of the last 10 years out here. 522 million shares. So the weekly chart was telling us that the Qs are trying to form a bottom. Now, if we come back, we take a look at the daily time frame out here. And this is where, okay, so what IBD is telling you is that the light volume may be a problem. Now, I started off the show saying there are problems in the Qs. It had nothing to do with volume. Actually, with regard to what we saw yesterday is a textbook rejection of a swing point that you want to see if you are a bull in the market. I know that you are a bull in the market. And what Stevie means by that is if we just simply go ahead and put a horizontal line, we're going to do this, across the actual swing point low. Come on, work with us. We'll make it a yellow line out here. And what we're going to do is we're going to take a look at the February 9th swing point. Now, that had 113 million shares. When price came back into it, the first time was March 28th, 89 million shares, light volume. The next day, 68 million shares, light volume. The next day, 85 million shares, light volume. 2 days ago, 64 million shares, light volume. Yesterday, another test and rejection, 65 million shares. From the bullish standpoint of which you are, you wanted to see that swing point get tested with light volume. If you get tested with volume, it says you might go down and really test the low. So you've got a weekly time frame that says the Qs have made a bottom. You've got a daily that says, hey, we've rejected it. Now what you need to do is you need to see market breadth confirm this. We need to see at least the resistance level inside the NQs take out Stevie's red line because you've got that falling price oscillator. Some of you out there took a look at my chart and said, you know, Steve-O, let's say that this chart here of the NQs is really telling us the message, which is not ready yet to break out. Interesting, because since you like that seventh wave move, that'd be letter G on my screen, you're going to say, I don't see that letter G. I see letter F. And that was yesterday. And that means, yes, there could be one more push lower to get this chart singing in the key of G. I will simply say that won't happen if we see the NQ close above Stevie's red line, 66.36. So, Eddie, for me, that's how I like to use volume, and especially inside the Qs. And that is, and I doubt that you will see this inside an IBD article or anywhere else, quite frankly, and just go prove it to yourself. The Qs form bottoms with volume. And does that mean that price is going to go down there and test that swing point? Absolutely not. Can it? Sure. But it tells you that you're in a bottoming formation process. All righty, we had another question out here is if we could go take a look at, I believe it was the Japanese yen. Yep, it was the June contract for the Japanese yen. And asking about profiles as well as any other tools that we have to go take a look and see what it is doing. So let's take a look at the yen. Let's look at yen futures. That way what you and I have is no delay out here. And this first specific question was, well, can we go take a look at it with regard to its TAS market profiles? And in doing so, we'll look at 60, 240 daily and the weekly. And where my eyes go to immediately is that price inside the yen likely headed to 93 cents, 0.93207 if you take a look at the futures contract for it. The reason is because price is below the bottom of the 60, below the bottom of the 240, below the bottom of the daily market profile. That's where it crushed below earlier today. And as long as it stays below 94 cents out here, well, the next level to be able to find support would be 93 cents. The weekly box happens to be a bullish structured box. That tells us that that should hold. Does it have to hold? No. But what you do know is you know where the front line, in this case here, maybe it's the back line, you know where there is a strong level of support. That's what I would be looking at. If we go take a look at Stevie's other tools, let's go take a look at the daily time frame. See what message it might be providing to you and I. We can see that its price oscillator is where? It is below zero. There we go. Boy, it is no, it is not below zero. It is above zero. There's the red line out here. So it looks like on a daily time frame chart that you've got an A to B equals CD. In other words, you have a potential Gartley buy pattern that would be forming. That 1-to-1, A to B equals CD, that didn't work out real well. I'll try to do this during this breakout here. And when I come back, we'll have the A to B equals CD pattern with its extensions out there that take us to 0.932, maybe 0.9259, maybe 0.9182. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Dow's up 147, S&P is up 11. A posting in the Den says that, hey, this afternoon we could see a big sell-off. Look, let's put it to you like this, and I don't know how you classify big. The average true range of these markets over the last 10 days, it's huge. Inside the S&P 500, that average true range is now over 500 points, 505 points. That means on a daily basis, we've been averaging 500-point moves. Yeah, that is gigantic. That is big. Let's go to Kansas and speak with Kevin. Kevin, thanks for calling. Thanks for holding. How are you today?
Hi, Steve. This is Ken.
Ken. Nice to see you. Nice to hear you.
I bought RTN. I bought some shares last fall. I bought some at, I think 142, and I sold it a month or so ago here at 216.
Man, you are a great trader.
Well,
nice trade.
Well,
nice trade.
Wouldn't say that, but it worked out pretty good.
Yes, it did.
A couple weeks ago, I don't trade options very much, but I bought 2 calls of the May 18th contracts. I got them for $1.10.
Okay.
I'm just wondering.
What's the strike price? What is it that you're after here?
Well, I'm wondering if the contract is up on May 18th.
Yes.
Is it best to? Well, of course you don't know, but when is the best time to look at selling it? Is it you let it go to the until it expires, or? Well,
I tell you what, because I don't have the full details of your trade. Let's do this. Let's take a look at what Raytheon, ticker symbol RTN, is doing, and then from there you can assess, if you're already in the money, what you may want to do. As you said, you had 2 contracts out here, and as we take a look at Raytheon, and truly to be applauded for both buying and selling. The actual high thus far took place on February 27th, and that trading session was anywhere from 222.82 down to about 219. I think you said you sold around 214, 218, somewhere right around there. So you sold up at the high. So, absolute kudos for you. It just so happens on that trading session, Ken, of February 27, as was making that high, what you had was a nice little shooting star candle. Now, at the same time that was forming out there, we're going to put this chart up on our screen, and we're going to see that price was also moving higher, doing it with less relative energy. And that was confirmed with that shooting star. And then the very next trading session, price got down below Stevie's red line out there. That told you that you were at some type of a high. Now, what we have seen here, in other words, about 2, 4, 6 days ago, as price was getting back into that swing point of its all-time high, you also had a bearish engulfing candle form. This thing had popped higher at the open, and then it continued to sell off throughout the day. What this is telling you, and this is telling me, is up in this area where we are at right now, doesn't mean it can't go a bit higher. But in this 219 area, 218.13, there are sellers galore out here. Now, there have been buyers, too, because if we take a look at, just for example, the volume pattern here from yesterday, 1.7 million shares was moving into about 1.5. I don't know from this chart. So we are at that point where there is a real battle going on. And it's kind of a narrow range out here. When I say narrow, I'm referring to about $207 up into this 219. It is not clear to me, Ken, that price is going to be able to take out the highs of 219, 222.82 from February 27th. There's sellers up there.
Okay.
So, we just know where they're at. And volume says you've really got a battle going on. This is like a Tommy Hearns and Sugar Ray Leonard fight out here. Both of them got this, stuffing beat out of each other. And that's what's going on here. Your outcome, your objective is to make money. And if your objective is to say, hey, I'm in the money now, is this thing going to continue moving higher into May? I don't see a clear signal that says that it is. So you may want to just go ahead and book those profits as well and wait till you get a better signal out here, or maybe you take one of the contracts off. I mean, you have lots of different options, but It is not longer term, Raytheon looks pretty good. Let me see if I can put Raytheon, see if this will pop up on our chart. Now, when I'm referring to long term, I'm using a monthly time frame. And let's just see if there's any pattern out here that is showing up from a monthly standpoint. Longer term, there's not anything that is showing up on a longer term monthly standpoint to say that you would exit this trade if it were in your long-term portfolio. The only way that we could make that type of prediction to say, okay, maybe you lighten up would be if you were to see a close below 206.04. But that's different than what you're dealing with here in your trade. Even though you've got, let's say, a month, 5 weeks to go, it's not clear to me whether price at this stage of the fight is going to be able to take that out. You may just be in one of those nice little consolidations from about 222 to about 207. Does that help assist you with your?
Oh, that helps considerably. And I noticed there were some insider trading sells here this last week too. So.
Okay. Yeah, and I don't know what happened. I mean, when that week or that day on the daily chart, when we look when it made its high, February 26th, the week of February 26th, that was a key reversal session. So the daily, the weekly are telling us that there are definite sellers out there. Does it mean that they can't be overtaken? In fact, if they are, and you see a close above 222, that's just indication this thing is going higher price. But for right now, I just see a big old brawl that's going on between buyers and sellers, and it's not clear to me who is going to win in the shorter term.
Well, that helps me considerably, Steve. I thank you so much. You have a good day, and congratulations, by the way.
Thank you so much. Good to hear from. That's Ken, longtime listener here at TFNN. Thanks so much for calling in. I wanted to go back now, folks, to take a look at the yen. And so let's go back, and we looked at the profiles, but we were just taking a look at the daily time frame chart. And callers have priority here. That's called priority seating here at TFNN. If you call in, you get right up to the front of the queue out here. So what we were looking for was an A to B equals CD. Now, this would form or could form a Gartley buy pattern. And the A to B equals CD pattern, what we're going to notice here, it doesn't happen often, but it certainly does happen. The A point is clear because it's the swing point high. That looks like March of 26. And then the first move down took us into a bottom on just 2 days later, March of 28. But from there, we have to go find the highest high. It happens to be the exact same day, March of 28. So the B point and the C point happen to be the same candle session. Now, what we can see is prices headed down towards that 0.932 level. And what we have is we have a weekly market profile. To recall the number, but I know you wrote it down on your pad of paper. Just because 0.932 is a 0.932 is a 1-to-1 doesn't mean that that's where price has to stop. It could head down to one of the expansion levels of 1.272, 1.618, 2. But either way, here's what you would do if you're looking to buy this. You would be waiting for the pattern to complete. How do we know if it's going to complete? Just like Ken and I took a look at where are the sellers hanging out, because we saw some beautiful Japanese reversal candle signals, bearish candle signals. We would be looking for the bullish signals as well. The other thing, you'll see some red and green boxes. Again, this is a daily chart. That happens to be part of the Rhodes momentum trading strategy. Now, on that trading day of March 28th, which formed one of those green candles, it said if you see it close above the high of that day, then you've got a move back to the upside. The yen in the short term looks like it's going to form a Gartley buy pattern. But until it does, it's headed lower. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the Dow's up 109, S&P up 7, and the so-called extraordinary moves, certainly of 2018, they continue to be present. And so we started off the show taking a look at where the real problems are. And because if those can be overcome, then what we ought to see is, and I'm referring to the NDX 100, if the NASDAQ composite begins to participate by getting over resistance, and quite frankly, the NASDAQ composite is going to go ahead and make a run for its island top that is out there. It's all-time highs, perhaps, but it's got a lot of work to do, or it has a bit of work to do before that call is going to be made. And it's hard for me to say, in fact, I won't say it. It's impossible for me to say that the rest of the market is going to continue careening higher without the NASDAQ joining along. Now, if we took a look at market breadth, which you and I had talked about, if I take a look at the market breadth inside the NASDAQ composite, it's not all that bad, meaning that its advanced decline oscillator reading is still above zero, albeit just slightly, 13.23 right now, and that continues to change. It did close above zero. That's short-term bullish, but this is going to be an end-of-day indicator. If this closes below zero today, because it closed above zero yesterday, tells you that buyers never had control. Now, that is a nuance that most people, other than you, aren't aware of, and that's why it's the whole idea of having to follow through. Now, as you take a look at this chart, now that we come back to this chart, which shows you the New York Stock Exchange, left panel, NASDAQ composite next to it, then the Dow to the right of that, and on the S&P 500 on the right-hand side, what you'll see for the New York Stock Exchange and the Dow is price also ran up into the resistance of its descending channel out there. So prices also hit another level of resistance that would need to make you and I a believer that this is more than just a counter trend rally. You and I cannot get caught up into the fact there was a 600 or 700 point move yesterday. Doesn't matter. Doesn't matter what the point move was yesterday. We just have to come back. Just like yesterday, we were saying, hey, the market is trying to form a bottom. This was at 8 o'clock when the markets were down 550 points. Here's what you want to pay attention to. Here's a level inside the NQ. If it doesn't get below this, then some type of bottom has formed, at least short-term bottom. Didn't say where the bounce was going to go to, but for that, we take a look at other resistance levels. You and I have them all the time. We just go take a look at Stevie's red line. It becomes really easy for us to figure out where resistance might be. If we could take a look at the New York Stock Exchange, we could look at that line too, but price closed above Stevie's red line. It's always incumbent upon you and I to understand where are the other areas of resistance out here. In the case of New York Stock Exchange, it needs to close above its descending price channel. Now, its price oscillator, its advanced decline oscillator is well above the zero line. It's up at 89.62. So it's really trying to give us a nice message that it wants to break out. But if it's going to be a breakout party, it's going to close above that descending price channel. The real key to the 4 charts that you and I are looking at out here, other than what we just talked about, the AD oscillator out here needs to close above 0. Even if that happens, the real key, in my opinion, is that price in the spot VIX index needs to close below the 50-day exponential moving average. It really is kind of that simple with regard to taking a look at technically what the markets are communicating to us. We just need a handful, maybe it's 2 handfuls of items where we just simply have our eyes go check it out and see, hey, because when all of these are confirmed in one direction or the other, it tells you a lot. And right now that level is 1864. We're priced at 1991. That doesn't mean that a bottom hasn't formed. It just means we could be chopping around. We could go back and revisit some portion of yesterday's lows, but we don't have the confirming signals overall. Another reason maybe for Ken to be a little bit more cautious on his option trade out there. Again, as your time frame horizon, what is the message communicating to you and I? Just like Eddie said, hey, he heard some of some of our dissertation on the Qs and volume. He's going to go back and listen to the archive, and so we take a look at that. We know that there's a bottom that's trying to form or has formed inside the Qs. We could take a look with regard to the S&P 500. It too is trying to form a bottom. It's been trying to form a bottom for a while here. And if we take a look at the last bottoming signal that came in, it happened to be several days ago when we saw the TRIN index, Richard Arms Index out there. They really ought to call it the Arms Index, but they call it the TRIN Index because that's what the newspaper published it as. But if we take a look at the trading session of April the 2nd, 2018, that closed at 2.61. You don't get closing readings above 2, but when you do, what you should say to yourself is, we're likely going to get a bounce in that very next trading session. Now, really important if you're trading equity futures out here. Oftentimes, it can also be a bottom. When we couple that with regard to where the spot VIX index is trading versus a 3 or 6 month counterpart, in this case here, we're looking at the 6 month counterpart, basically telling you that the current spot is trading above all futures contracts. That tells you a fortune. It tells you that out in the future, it tells you that this thing has gotten way overblown. Way overblown. Because if there were really issues out here, you'd see those futures contracts well above the spot VIX index. When you don't have that, you'll see the green arrows that show up on my screen. As of late, because of this volatility, they've basically offered nice short-term bottoms out here. But one of these is going to turn into the real bottom. Is it the one that occurred on April 2nd? Maybe. It may be out here. But if that's going to happen, then the things that you and I looked at will start being able to be checked off our list, and that says, okay, then you're going to go run back towards the highs. We just don't have that just yet. We want everything to participate in this market, especially with the intermediate term time frame and the daily time frame bearish patterns that are present inside the NDX 100 out here. So what else can we look at? I'm sure somebody is saying right now, someone's saying, all right, Steve-O, I got you. I heard you. But when are you going to talk about gold? It's trading down $11, trade out at $13.29. So, all right, I heard you. Thanks for asking. And, I appreciate it. Let's go take a look at what does that mean? It's trading at $13.29. Well, I need to grab the actual correct page for us in order to be able to go answer that question. So here we go. We finally got it. But that was the Japanese yen. We don't want to look at the Japanese yen. We've already done that. We want to go take a look at Goldilocks out here. And we take a look at the 13.29 level. What does that mean to us? Just really means we're trading a range out here. The bottom of its daily profile is 1322. The bottom of its weekly profile is 1324. That weekly profile is a bullish structured profile. Right now we're just trading in this range out here, which makes it very difficult for those of you that are trying to trade the mining equities. Dangerous time to be doing that at this stage. The easier time, it's kind of like driving down the expressway. There are certain trips that I take, and it doesn't matter what time of the day it is. For the most part, I know where there's going to be traffic. I still go that route. I know it's going to be traffic. And in the case of gold, We know where the traffic pattern is. We know that once we clear a certain area, we're going to be able to put the pedal to the metal all the way down. And you know what that is. It's 1107.70. You're going to say, well, we're trading at 1329.20. $1,107.70 in euros. When gold clears that level, put the pedal down. Until then, just expect a lot of sideways, choppy action. Steve Rhodes with TFNN. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Let's go out to Ron in Denver who wants to take a look at Intel. Ron, thanks for calling. Thanks for holding. Tell us how I can help you.
Well, thank you, Steve. I'm long-term on some Intel at about a few years ago at 22 and some more at 23. And just a couple of days ago, Intel said they lost, they're going to lose their processors that Apple's been using. Apple's going to do their own in Mac. So Intel got hit a few days ago, dropped down to around 47 and a half.
Sure.
I just wondered, at this level right now, do you think it'd be prudent to take long-term profits and step away, or do you see further upside?
Where would you be comfortable? Where, if price came down to what area, would you still be okay with holding it from the long-term standpoint? So you're at $50. How much room would you be willing to give it based on where you're at in the investment?
Well, I hadn't thought about that, but if it fell down, if I could
if I thought it was going higher, I'd like to hold on to it. But if it's going lower, you definitely don't want it to go below $48.
Below 48. Okay. So you're really not willing to give it much room out here, because the average true range on Intel is $1.92, and you're trading at 50. So it takes just a normal day's movement to get you back to that $48 level. Now, I'm not saying there's anything wrong with it. I just want to make sure we have a proper perspective. So you got a $2 average true range. That would be that would be normal for it to trade back there. Here's what you have to be concerned with, and that is that on a weekly basis, if this were to close below 50.48, you're at 50.12 right now, this would suggest to me that this could easily pull back to the $42 level, because it would be making one of those significant type of a top out here. That's the intermediate term. If I turn this to a monthly term time frame, it's going to say there is no signal here at all to get out of a long-term holding inside of Intel, and said there would be nothing wrong with it if it pulled back to 46.41. So unfortunately, we're out of time, but I can look at this further for you tomorrow if you'd like at the opening. All right.
Okay, thank you. Appreciate that.
You bet. That was Ron in Denver. Folks, stay tuned. David White is up next. It's Terrific Thursday. Tom O'Brien from 3 to 5. Andy Heck from 5 to 6. I'll be back with you on Fantastic Friday. Thanks so much for being here. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.